Overall, there's a cautious approach on where we're headed in the future. The private markets, the equity markets are largely driven by earnings reports, right? And one of the most recent that we saw, because I think as we all know, the S&P is heavily influenced from a market cap standpoint. You've heard called the Magnificent Seven. These are the big high tech companies, the NVIDIAs, the Apples, the Microsofts. That's driving a huge percentage of the increase that we've seen in the S&P. I'm going to answer your question a little bit of a roundabout way, but there's something called the efficient market theory. Eugene Fama, University of Chicago, Nobel laureate, won the Nobel, I believe, in mid-90s, 1995, actually started work in the mid-60s, early 60s, mid-60s, on something called the efficient market hypothesis. And that's simply a way of saying, by the time you've figured out the angle on that stock, it's already built into the stock price, right? Because there's so much information out there that's available for us to take advantage of. If you get that hot tip that your buddy told you about and you decide to make an investment, that hot tip has already been included in the stock price. That's built into the stock price. So unless you're an insider trader, or maybe unless you're a member of Congress,
I was going to say, yeah, unless you're sitting in Congress right now.
right, and you don't have access to that information that's not publicly available, then that's already built into the stock.